Hello and welcome to this latest market alert. My name's David, I'm the Chief Market Analyst here at XTB UK, and today I want to talk about some big moves that we've seen in the markets and also a major event we've got coming before the week is out that could have a huge impact on the market itself. So to start off with, let's go to the calendar tab here on the X station. If we go back to yesterday, you can see we got the ISM Manufacturing Index release from the US, which actually fell to its lowest level in 10 years. You can see we got this reading here of 47.8, which was well below the 50.1 expected, and the second consecutive month that we've seen this in contraction territory. Now this caused quite a big move in the markets, and you can see here, for instance, on the US500, when the data dropped, we were trading up around 29.90, but the market's fallen sharply since then. We're down by around 70 points, somewhere in the region of 2.5%, and in doing so we've also dropped below the 50-day SMA. You can see that's indicated here by this blue line. Another thing to note with the 50-day SMA is this has been levelling off, which suggests that possibly the uptrend that we've seen for much of the year is taking a breather. However, it is worth pointing out that we're still above the 200 SMA, which doesn't come in here till around this 2,850 mark or somewhere in that region. It's been a very good year for this market. You can see after the low that we saw just around the turn of the year, we run a fib from those lows all the way to the record highs of 3,029. We're not even pulled back to the 23.6% fib retracement yet. So whilst we have seen some weakness lately on the back of that ISM release, it will be interesting to see how we trade going forward. And Friday's release, which I'll talk about later on in this video, the non-farm payrolls, could well dictate where we go from here, whether this is just a pop lower after we break below that prior support of 29.40, or whether it is actually the start of a bigger pullback. To put this weakness in indices in perspective, I've got a DAX chart here on that 1 hourly. Now you'll also note, whilst this was a US release, we saw some weakness in European markets as well. You can see actually after pushing back up around 12,495 early in the day, we tumbled sharply in the DAX, and you can see the DAX actually fell in excess of 400 points, around 450 points, and it's just making its low in the past hour here. And when you see a big decline like this, one way to measure the scale of the decline is to use the Relative Strength Index, or RSI, and if you hover over here you can see that the RSI is currently at 19.4, so we're in fairly extreme oversold territory. That's not to say that the market will definitely bounce from here, but it does reflect what's been a sharp move lower in the past 24 hours. Now we saw another interesting market reaction to this ISM data in commodities, particularly gold. You can see the market here had dropped to its lowest level yesterday since the start of August, but on the back of this weak US data we actually got a pop higher in gold. Now it's not unusual to see gold react positively to soft US data, as you have the impact of a weakening dollar and also the expectation that you could get a more accommodative policy from the Fed. We did have a head and shoulders formation potentially playing out here and a break below the neckline just the day before, but yesterday we saw a green candle and a bit of a recovery, and today we've seen further upside and we are now back above that neckline, which comes in somewhere around 1485 and not far off retesting the 1500 handle. To put the gold chart in perspective, if we take a step back and look on the weekly time frame, you can see we've got W1 up here. You can see we have had a strong push higher in recent months, although the past couple of weeks have seen a bit of a pullback. We had this falling trend line which was broken above decisively at the start of the summer. We also took out swing resistance around 1390 and ran all the way up to 1555, which broadly coincides with these lows that we saw back in 2011-2012. The big picture for gold, we've seen a kind of bottoming formation over the last 4, 5, 6 years, but now as long as we do remain above this 1390 level, the longer term picture is quite constructive for this market, and if it does get above 1555 then we could well see another quick run higher back up towards these highs that we saw back in 2011. The last chart I want to talk about comes from the FX space here with the Euro US dollar, and you can see here we've been steadily drifting lower. And one of the ideas behind this really is that we've seen a general outperformance of the US economy compared to the Europeans. We've seen weakness in the euro compared to the US dollar. However, this latest ISM release does throw that into some doubt. Whilst the US had been outperforming, perhaps it is being sucked back in and struggling like the rest of the global economy. And we've actually seen this market recover from what was its lowest level in a couple of years. You can see we've still got this gap higher, which came from the first round of the French elections back in 2017 when it became apparent that Macron would win, which remains unfilled from 107.15. But we have actually pulled down towards this area but seen a positive reaction if we go to a daily chart. Flip into a daily chart here. You can see it wasn't quite a bullish engulfing candle that we got yesterday, but a clear positive reaction as the dollar fell back after that ISM release. And today, similar to gold, we are looking to push higher here once more and see if it can get back above those levels that we've seen previously. Just to talk about a potential resistance zone, this 111 mark has acted fairly well. And it's not really until we see price get back above 111 that you could expect a sustained move to the upside. Finally, I just want to talk about the non-farm payrolls, so the release itself that I've been mentioning, which is a key event coming this Friday. You can see it's due out at 1:30, and that the consensus forecast here for non-farm employment change for September is 145,000 after 130,000 last time out. Another thing to also keep an eye on is the average earnings. You can look here, 0.3% expected month on month compared to 0.4%, year on year expected to be in line, and also the unemployment rate to remain close to its lowest level in several decades. Okay, thanks for listening and best of luck if you're trading this event in the coming days.